Hey guys, so I'm just going to run through another video of taking continuous gains, exiting all market cycles for net profits. This is something myself and my co-founder Alex Soro have taught for a very long time. We traded for a very long time, and we can teach you to do the same in the same way underneath this video. If you want to do that, just go under there. I'm just going to let Forex Tester 6, which is the program I'm using, just populate some data. And then we can go ahead and we can start trading. This simulator basically runs a history of markets. I don't know the daily price movements every day. So it works as a means for us to test and basically for me to show you how I use hedging rather than stop losses generally to create consistent gains with a low risk format. And you're only going to do that if you're taught in the right way and you practice. So as before, we'll just make it nice and simple. 100k equity, we picked one asset. Obviously, you would have a larger portfolio. Generally, we teach traders to have a wide portfolio. But in this instance, we'll keep the max size at 0.1, so 10 micros or 1 mini lot. And the minimum size, therefore, is going to be right at the bottom, 0.001, okay, 1/10 of that. So in this instance, you're seeing a bit of momentum to the upside. Okay, but the price has already ran slightly, so I'm going to get long a third of max size or so, and I'm going to let the price do its thing. Now, I don't know really where we were before this. I haven't sort of studied the movements of the Euro CAD on these years before, but because of the upside momentum, I'm happy to take along that size. I'm now going to add another one, so I've got 60% of one maximum size. And we can see really where we're going with this. If we hit any further lows, I can add again. But at this point, I don't really want to. I'm just going to speed things up. Okay. Looks like we'll break the low because of the momentum. And there we go. So we broke it. If I add another one, you're now at 90% of one maximum size over about 200 pips. And that's okay. I mean, that's reasonable for me. I don't mind that at all. I'm going to not add again, though, for a reasonable period of time. Now, I can see weakness in this market, so I'm going to close that one off, not because there's 92 cents of gains, but because I just don't want the risk. I don't need to hedge yet because my drawdown is not significant. Okay, so I'm still free to add again if I choose. I can hedge short. Because price is already very low, I'm just going to hedge 0.02. So I'm now protecting the growing loss on those positions. And as I said in my last video, for example, that gain of just under $3 seems small, but if you repeatedly do that, then you are going to find over time, and sometimes very quickly, your loss actually becomes very low because of those hedge gains. Okay, if you take lots of them. So we missed the pause there. Okay, so $18.55 hedge gains, close. That is about a sixth or a seventh of this overall drawdown. I'm going to take a long at 0.04 because I've got 0.03, 0.03. So that makes a max size of 0.1. You can see I've spread that from about 1491 to 146. Okay, 300 pips or so. That's very decent because Forex markets can range a lot. And I would say what is absolutely paramount to trading Forex profitably is literally being able to sustain the ranges that do occur. Now, the initial price rejection on this is poor. I don't want to hedge just yet. If we get up to early resistance, then I'll consider a very light hedge. Now we're pushing through. We've got a bit of price rejection there, so I'm going to buy again. So I've simply moved my long lower. Again, any reasonable push up, I'm going to be out of that long, and I'm going to look to get short for a hedge. Okay, so rejection there. Very, very small hedge I'm going to have here because the price is so low down. And I'm happy to start losing money on that small hedge. Okay, so I think you may break lower. Okay, so I'm going to close this. You can see I've actually taken it at 0.2, okay, which is a typo. Be careful, in other words. So that would have been $4. So we can discard about $36 of this, which we'll do at the end. But there we go, 0.04 long. It's easy to do that on MetaTrader. Obviously, this is slightly different, but yeah. So there we go. We're 0.1 in over this time. And now we can look really so there's a good bit of momentum there. Don't quite want to hedge yet. I can see growing momentum. I'll probably hedge at resistance 2 and exit area 1. So we'll see where we get. So you can see price is still falling. There we go. There's your rally. I probably would rather hedge at this level. So I'm going to let things run. Momentum's still there. Okay, so that I'm out. I can see rejection coming in, and I can see a little bit of that south side movement, which is going to be ideal. So if we play on 0.02, pause again, very small hedge gains, $5.49. I can take a light long because we've already lost quite a bit of the long value, but you do have momentum being sustained. Okay, now it looks like the momentum won't be. So if I can kill this one, I will. In fact, I'm going to add to just make that 0.4 because there was still a bit of long side momentum, but it's fading. So what you're seeing at the moment is a sustained downtrend, and the market's just pouring through. So still weakness there, still falling. And my drawdown, $240. So we've got still an exposure total of 0.1, which is not awfully large. Any real push, and I'll probably look to hedge soon, or at least take something to the short side. There you go, 0.02. So now that's short losing money. Any significant push to the upside, I'll kill the longs and flip short. So there you go. I will kill this one, and I'll leave the other one on because there is still a bit of long side momentum. And I'll exit. And I'll flip short to hedge these former entries. It would be a 100% hedge now. And we can so we can kill that edge there. And I will actually rebuy a little bit as well. Okay, so just slowly accumulating gains now. And that former short's still out the money. Now I can see rejection coming into this too. Again, so I'm going to just flip short a little bit. I'll probably kill that one early as well if it has a rash dip to the downside. Like that. I mean, it's only $1. It's not, again, because of the profit on it. It's because of the fact that there's sustained momentum to the upside. So any larger pop now, I'd be happy to hold. I'm not quite going to add long again yet. I've still got this out of the money short. Now I can actually close that for $14 loss because, you know, I don't need to be in it anymore and I've effectively got the profits to hedge out. I'm just going to flip long again. So I'm now back at my 0.1 max size. And that's max size per entry overall. So that can be spread out. I'm going to kill that because there's weakness. I can immediately hedge this former 0.02 long. Okay, so now popping up much higher, I can kill this one. And that other short I took was literally just in case. Short there. Now, I probably won't add anything considerable at all until you get a real rise. So we can see it's not transpiring yet. I will add long now. Now at this point, what we got is very tentative supported price. So I'm going to kill this. So that short's gone. And I'm not going to add again just yet. I don't think I need to. Or I will on a dip like that. Oh, don't want to do that. And at this point, if you take off the $30 that we had before, or $40, you're still not much in drawdown. Now, this particular cycle that we ran through for the first part of this video has been less profitable because you've had sustained moves against you, essentially. But there will be times where there's continuous moves with you and therefore continuous gains. So really you're looking for something to shape up now. I'll put it on the max speed. So pushing lower, I've got the choice to add. The drop now has been almost 1,000 pips. So therefore you would expect something to give you something at some point. Drawdown $378 plus the 80 or so we've gained. We're down to 90, but that will evaporate quickly on any further moves. Okay, so market still dropping tentatively, and I'll probably add another max size if I can. There we go. So I'm out of that. Now I can decide how much I'm going to short for a hedge. Drawdown still nothing dangerous at all. Okay, so momentum is sustained there. So I'm going to close that. I think you'll probably break the high. Nope, you didn't. I'm going to add a little bit long, 0.03. Just keep an eye on that drawdown. Would have killed that. Sometimes it's too fast. I think you'll break the low. There you go. Low broken. Now push up to early resistance. We can take a hedge. Now look at the drawdown. $644 plus the 150 or so we've taken. Okay, I'm just going to slow this down. So in reality, you're about 0.5% in drawdown, which is sustainable, and that's a happy level for me. If we start going beyond that, I will probably stop adding. Okay, so I'm going to add again short. Still got our longs in play. I'm going to kill it just because I want to lessen the danger, if you like. And now you really want to just see what happens either way. See, that price action is troubling this, but still take a little bit. Now, I wouldn't mind closing that because we're back at lows and I can reinstate a long, but it's going to be a little bit more careful because of the level decay here. In other words, price still very momentous to the short side. Kill that and I'll flip short, but I'll do it 0.2 because of the risk and how low the price is already. Kill that off. Gains light long because of, you know, how ugly it looks. Now this is where you probably pick up the profits rapidly. So there you go. Blah, blah, blah. And this is great for traders who are hedging because these times really allow you to stimulate a lot of gains. Take another one. And if it breaks higher, that's okay. I've got the option now to decide, do I want to buy? I think I'll hold it off just to give me a bit of a gap in where I last bought and my drawdown, basically lessen it or keep it safer. So now we're getting back towards longs and these shorts are losing value, but they're not massive shorts. There we go. So I will be careful with this one. Okay, so I want out of that. It's decent. And I will actually flip long, 0.03. And what I'm going to do is just close out that last short for a loss in case you pop back up. So again, drawdown sustainable. Probably real drawdown if you factor in gains, 0.25% now, so better than it was. Got the chance to add under that short, which is what I'll probably do. if you get under it. Almost. There you go. I'll get rid of that. And I don't like the area as much, so I'm going to point to it, 0.02. Now I've got no short hedges and we're back at lows. So I'll look to hedge if I can on a burst to the upside, if we get a burst to the upside. Which doesn't look like we are yet. Okay, so we're pushing lows. Drawdown now getting to a point where I don't want to hold longs anymore. So I'm going to close this for a loss because I need to reduce, and I will actually got the choice really. I'm about $466 in reality down because we're taking off that $40 I made by accident. So it's about 0.45% drawdown. So I'll put a hedge in. Now that short is going to be, as you can see, we've got 0.03, 0.02, 0.02, and then we've got another 6. Okay, so it's about 0.13, isn't it? And now we've hedged, so our real exposure is a bit less. Hedge again. There we go. So like I said, yes, that's $18, but $18, is probably 1/20th of our real drawdown. So I'm happy with that because all I need to do is just quick 20 times. It's not going to take an awful amount of time. There's another one. So real drawdown now, if you take off that 40 initially, it's about 250 off of 850, 0.55. Okay. So I'm not going to add again. Now, this is a real pull on the market. If you look how far we've gone now with very minuscule drawdown, 138, let's say, to 153, that's pretty rare for a Forex market move like this. And like I said, we're sustaining our equity on the fall and sustaining ourselves because we're hedging, and I'm taking gains on both sides of the market, not just one way. So that is a big push. I want to get rid of that, and now I can look to take another slightly larger hedge. And that's a decent setup for shorts. There you go. Whack, straight back down. And what's happened there as well is we've now moved our long a lot lower. Okay, so now we can pick up some gains. So I don't want to be in that. I will leave that low hedge on. And now we're about 0.4 real drawdown, if you like. When I say real drawdown, I'm factoring in the gains taken against the running drawdown, because at some point you'll obviously take profit and it will all more or less equal out. So you can pay yourself, if you like, as a withdrawal on any time period. If you do it over months, let's say 3 monthly, then you're probably going to have a time where you can really reduce and then just take the withdrawal. At this point, I would have hedged higher. I can still see weakness, but I'm not really willing to add massive shorts because I just don't need to. My real drawdown is very low. Price is really trying to come up, and it's still supported. So I will take a light long. I don't want to go anything serious. Any push under that short, and I'm out. I know it's low, but I'm just going to take a little bit on purpose. Any real push to the upside again, I can look to exit on a further move. So I can take that like this. And then anything higher I can add again and let it run. And then I can kill it off the gains again. And then I can add long again. And I can let it play. And then I can kill it again. And then short. And then play again, see where we end up. And then I can kill it again. So I'm taking a lot of gains now on both sides. And ultimately, when the price moves accordingly, I can exit finally for a full set of gains. So we can look for some long side momentum. I'll speed this up a bit again. Really, the cycle for this is going to end when we get much higher into the area of our longs. Okay, and I can add short slightly again. Mostly that is the case once you've reached a point where you've reached the, the end of the cyclical process, typically when the market reverts on some market sentiment change. So out shorts again, but like I was saying before, you can really see, so my max drawdown has now been hit of 1%. Okay, but I've taken many gains already, $400 or so. So really that drawdown is much lower, about $700. I am going to close this long because I don't want that on anymore. So really what we've demonstrated here is a very harsh cycle against us. But like I said, when sentiment ultimately changes, that's when you reap all the rewards. And the goal really here is to sustain the move as long as you can. So $360 off of this, okay, is going to be about $800. Remember, the reason why is because I'm taking the $40 that I made by accident before. So we're still coming down. And now this move is about 2,300 pips, which is extremely rare. But the good news with this is that it's showing you what you can survive without having massive drawdown. Okay, like I said, my real drawdown is still under 1%. So gains there again, $30. That's 1/33 of 1%. So those gains do really add up. So now we're getting a good push to the upside. I can start to hedge these former shorts. Kill that for gains. I can go again long lightly. Draw down now $400 off from that 849s, 450. So we're sustaining this massive move against us very well at this point. Okay. And like I said, it's because I'm hedging out all of these former positions. And when the price is a lot more fair, I can then close them. And it's unlikely that a Forex market really, realistically over time is going to swing this far every year. So as long as you can survive a move like this, okay, you really shouldn't have an issue. And that's exactly what we've done here now, because 656 take off 420 or so, real drawdown is absolutely minuscule. And if the market runs higher, as it is, what will happen is we can now take off this, and any push into the longs like that allows us to close it all out. And then we can see our net position quite easily is now 100,703. Take off the 40 we made. Okay, is 660 we've got banked. And then these former entries, okay, are now hedgeable. And on a big pullback like that, we can kill them off, kill some of them off, and they're effectively washed away. And we can then flip long. Okay, and again, any move higher, I can take gains on. But even if you close that for a loss, okay, and you now look at this, you've got overall net gains. Take off the 40 we made, and you have survived a swing from 153 to 130. Okay, like I said, look at the pip count. Okay, you have survived that swing and you're still in profit, and you never had more realistically than 0.8 real drawdown, well under 1%. That is how you survive a swing of that magnitude. We could have kept going and going and going, but you're in net gains on, something that would blow the accounts of most traders. If you can survive that, you can survive practically anything in Forex markets. If you want to learn how to do that, just go underneath. See you in the next one.